Historically, equity was used as a way to grow young companies. And that meant a journey of 5 to 10 years with no returns for investors. It meant something that was much more speculative. And as we've moved those equity models away from funding the kinds of breakthrough innovations, breakthrough IP that builds new physical products that created American prosperity, over to investing more and more in software companies or software IP that has much less impact, lower barriers to entry to competitors, more challenging to exit these companies. The problem has only gotten worse, and we see it very, very difficult for venture capital firms to make money in a market, in a software market, and they've left a giant hole in place for the companies that are actually going to transform our future today. Those are companies that are developing and have developed breakthrough innovations, breakthrough IP that change how we manufacture physical products, whether it's to make that manufacturing process more sustainable or more circular so it has less impact on the environment, or drives more efficiency, meaning higher growth and higher profits into that business, or whether it changes the way in which this product works so that you get more out of that product, more efficiency, more productivity. That's where the future lies. And to sum it up, green is really where the revolution will come. It's where our new generation of unicorns will come from. It will not be over in the digital product realm in software. And so COTE was created with a model that aligns investors, and it aligns the company in growing a business that when it reaches markets actually has a product and a manufacturing process that's highly differentiated in the market. It doesn't suffer the kinds of competition issues that digital products and software have to face that make it challenging to see that company be successful. It actually enters the market with a product that often nobody else has. And that means long durability and revenues. And the challenge they face is a different challenge. It's not competition, it's how do I scale this business that takes a lot more capital because it has to build out manufacturing capacity and operations. And so I built my model based on many years of experience working with young companies that built industries in America, as well as established companies that did the same. I listened to their problems. I understood the issues with venture capital today, having moved over to the digital product realm and to software IP. And I heard the cry out from investors as well as young companies for a new capital model that would actually align with their interests. And so what makes the IP capital model powerful is that we move from owning equity in a business to sharing in revenues. That means those entrepreneurs will own their business. They'll be incentivized to do the hard work to grow that business. But it also means for investors, everyday investors actually, that the risk profile has changed because now I actually can get a dividend or a share of revenues along the way. I'm no longer waiting 5 or 10 years to see a return that in most cases never comes because of the competition risk that you face when you're investing in digital products or software IP or software companies. And so now we have a much more powerful way to fund the growth of these companies that's good for the company, for the entrepreneur. We don't take away his equity ownership. It's good for the investor. He sees performance in revenues, and he's actually sharing in that value he's helping create by building out or investing in the building out of manufacturing capacity and operations. And the second thing that's a game changer in how we grow the next generation of companies that better aligns with who those companies are and what they do. They're breakthrough innovations in building new physical products. Those companies create the kind of asset base, new product designs, know-how, and manufacturing equipment that has significant value. And that value we underwrite. And we look at how we might sell that asset if something were to go wrong, in the unlikely event that something were to go wrong. And so we not only have a model that pays dividends along the way for investors as a game changer, we now have an asset that secures that investment should something go wrong. And that is additionally a game changer. So the fact that IP Capital is asset backed, the fact that IP Capital is dividend paying, and the final thing that we bring is scaling services. We're allowing these companies to work with us and bringing them kind of the skills that are often lacking in these young companies, whether it's how do I protect my IP management skill sets and services, how do I scale this business from afar, which is a technology infrastructure, smart manufacturing, we help them integrate that, or whether it's how do I scale my people, my process, and my product globally. We bring operational expertise from experts in the industry. We bring a suite of scaling services. So it's not just a better capital solution, but it brings services. And the combination is what makes IP Capital such a powerful model that we hope millions of people will join in our effort, in our mission to help scale the use of that model, which in turn will allow many, many more companies to grow and thrive that can make a difference in the world. And again, that can bring manufacturing and IP back to America.